Hello, I'm Tammy Green, and this is your Weekend Forex from UFXBank. Today we will review last week's market highlights with financial analyst Martin Smith. Last week we saw the resignation of Japan's Prime Minister and the selection of his replacement. There was discussion last week of a possible rate hike in the United States, as officials are encouraging the idea of raising it to 1% in hopes of making the dollar gain. G20 meetings are continuing as the Eurozone crisis is still a major issue for the global economy. So let's welcome Martin Smith now to give us his insight on these and other issues in the market. Welcome, Martin.
Thanks, Tammy.
So can you tell us a little bit about Japan's new PM?
Sure. Naoto Kan was a former finance minister and a well-known fiscal conservative, known as a non-conformist, and was elected on Friday to be the new Prime Minister of Japan. Now, many are putting their hope in this man that he can take the bold steps necessary to fix the struggling public finances of Japan. Keep in mind that this will be Japan's 5th Prime Minister in 3 years. He has the duty of reining in the huge public debt, engineering growth in an ever-aging society, and as well as managing ties with the US and China.
Tell us about Hatoyama, the Prime Minister that just resigned.
Well, Yukio Hatoyama was unpopular and quit last week ahead of an upper house poll that is expected in July that the ruling bloc needs to win to avoid policy deadlock. Now, Hatoyama also promised to wrestle control of policy from bureaucrats and give consumers more cash to stimulate domestic demand. Now, his somewhat abrupt departure has raised concerns among investors that the government will delay efforts to thrash out plans due this month to cut public debt and craft a growth strategy. It's also worth noting that President Obama had sometimes rocky relations with Hatoyama, and his administration seems to be welcoming Kan's election.
So how exactly did this impact the markets?
Well, Japan's currency was headed for a weekly drop versus the euro after Kan became Prime Minister. Onto another yet very important topic, the dollar is showing signs that a strong recovery is very probable. The overall fundamentals remain supportive of the dollar. I foresee that the dollar will gradually strengthen against the euro. It's also notable that the US economy added 536,000 jobs last month, the most since 1983.
What about the rumors that have been going around that there'll be an increase in the federal fund rate?
Well, Tammy, there are important facts to support this rumor. Kansas City Fed President Thomas Honig said on Wednesday that the US economic recovery has the momentum to sustain itself and called for an increase in the target federal fund rate to 1% by the end of the summer. Now, Honig has dissented on the Fed's pledge to keep its benchmark at 0 to 0.25% for an extended period. It has become apparent that the Fed will be the first to come out of a stimulus measure among G3 nations. And this outlook will give the dollar some yield advantage over rival currencies.
Isn't Honig a known anti-inflation hawk?
He sure is. He says that the US Central Bank should raise its benchmark federal fund rates to avoid being slow in responding to the recovery.
Before we finish, do you have any technicals you can share with us this week?
Sure, I'll review a few. The dollar yen is trading sharply higher, strengthened by greater demand for risky assets. And on speculation of Kan, the new Prime Minister will favor a weaker currency. Look for upside pressure this June to continue to drive the Japanese yen higher, as long as it remains over the 61.80 retracement level at 92.41. Now, a failure to hold this level could mean another test at 91.61. The euro dollar continues to remain inside a tight range, indicating impending volatility. Watch for a change in trend and an acceleration to the upside on a trade through 124.53. A breakthrough through the low of the week at 121.10 is likely to attract more hedge fund selling pressure. Well, either way, this market seems to be set up for a major move. It's just waiting for fresh news to act as the catalyst.
Well, thank you, Martin, for joining us this week. Until next week, I'm Tammy. Be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can now follow us on Twitter and Facebook to submit your own questions to our weekly broadcasts. Please email us your questions to Martin at askthebroker@UFXBank.com.